philsgang.com, and listen to my radio show every weekday at 3 Eastern. What is the market going to do? We know exactly what the market's going to do.
Phil's got the answers at philsgang.com.
There's no need for you to be losing money.
Check it out, philsgang.com. You want to invest your money and grow your wealth. How do you invest intelligently? Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level. Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy and sell to help maximize profits. Sign up for a 10-day free trial to see our platform in action. Learn more at philsgang.com. That's philsgang.com. If you invest in the stock market, take a moment for this important advice.
Hi, I'm Phil Grande at philsgang.com. You've got to stop listening to the fake business news networks because they tell you what you want to hear instead of what you need to hear.
Phil Grande guides you step by step on investing.
You're going to know exactly what the tone of the market is. Do I sell? Do I not sell? Do I buy?
All you need to know is philsgang.com.
Check it out, philsgang.com, philsgang.com.
When you listen to the advice of Phil Grande at philsgang.com, you'll find investing in the stock market makes sense with the right guidance.
People keep saying to me, boy, things are hard, things are tough. Boy, the market's really screwed up. I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up or why there's continued inflation or why the bank rates are going up. So you understand, especially yields. The most important thing to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com.
I signed up, and I've learned an incredible amount from Phil and Steve. The staff at Phil's Gang gives platinum-level service and stock recommendations. It's as simple as that. At the end of a month or so, I've always been in the black. Phil's Gang is a class act. I'm happy to be a member.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264. When the stock market is up one day and down the next, you need experienced advice from a pro.
Hi, I'm Phil Grande at philsgang.com. I know you're sitting there watching the stock market. You're going, what? Is this nuts? Market goes up 700 points. Next day goes up 800 points. Then the market goes back down. Then it goes back up. What that is volatility.
You want to invest your money and grow your wealth. How do you invest intelligently?
But you got to anticipate what's going to happen with the market. And that's what we give you. Information so you can anticipate in advance what the market's going to do so you know what stocks to buy, you know what stocks to short. It's all about having good information and anticipation. You got to anticipate. The one thing you can't do is rely on your brokers. Listen.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What are you, nuts? Partners or shareholders? You're not included.
Check out the free 10-day trial and follow Phil to investing success. Learn more at philsgang.com. philsgang.com.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money, money, money's coming to me. Money sets me free. I'm a money magnet. Money, 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 money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
And welcome to Phil's Gang radio show and podcast for Friday. Did anybody catch the Zelensky Trump battle, boy, did that guy blow it. You know, he should have read Trump's books before he negotiated with him. You know, The Art of the Deal. I mean, Trump's trying to take the deal away from him. He doesn't understand that. That's all Trump's doing, trying to pull the deal away from him so he comes back and, never mind, I don't want to get into it, but it was the guy was so stupid what he did. Anyways, let's get to what's really important, okay, is the stock market. The stock market's in trouble, but we still can go to 6,200 on the S&P. Now, this is what's really interesting. Listen to this nonsense.
I think that there's a chance that this market continues to run up for the next couple of years, if not the next 5 to 10 years, right? We have this good kind of roaring 2020s type of backdrop here where inflation is falling, not exactly where we want it to be, but it's going the right way directionally. We have a Fed that is poised to keep rates steady or at least cut rates. Earnings are looking good. Jobs numbers are looking pretty steady. Consumer sentiment is solid. And these companies are returning great earnings. I think.
Unbelievable. Consumer confidence is solid? Doesn't she do her homework? January, the consumer confidence was terrible. It was twice of what they thought it was going to be. It dropped 10%. And then February, it dropped another 10%. Are you kidding me? Consumer confidence is shot to hell, and you can't blame them. And in fact, not only the consumer confidence is shot to hell, do you know that we have 3 different bubbles? We've never, ever had 3 bubbles, ever, at one time. We got the stock market bubble, we got the housing bubble, and we got the credit bubble. We never had a terrible credit bubble like this. Now, why do we always have the terrible credit bubble? Well, because remember what Powell does, okay? Powell has a scheme. For 4 years, he's been telling Congress and us that his monetary policy is doing good, that he's going to get back to his target of 2%. And the other thing he does is Powell will turn around when confidence goes down. And the first thing he does, he will turn around and increase the money supply. That's not what you want to do. All previous Fed chairmen would increase business investment to increase production, to increase salaries, increase wages, increase good jobs. That's how you get the confidence up. What Powell has done, I mean, this guy's a loser. What Powell has done, first thing he does, he and the Fed, they'll contact Treasury, tell Treasury to print a bunch of money. And then they take the money and they purchase a bunch of treasuries. And they put that money into the banks for consumers to borrow. He does this over and over again. Every time consumer confidence goes down, that's how he gets the confidence back up. Go get them to spend. So he keeps on printing money. And that is not a good thing because that is very inflationary, terribly inflationary. So he should have been, again, increasing money or printing money to put into business investment. He's not doing that. So every time he does that, in fact, it's caused not only a lot of inflation, but even today, the consumer is so angry over inflation that this guy caused through increasing money supply. The consumers are holding a boycott on all the box stores like Home Depot and Costco and so forth. And they're mad at Costco and they're mad at Target and Home Depot because their prices are going up. And he's the cause of that. Because every time you increase money supply, the other thing happens, the dollar drops. And the dollar drop, that means now everything we import is more expensive. All the materials that we import for durable goods, for automobiles, for vans, machinery that we build, and all of the stuff that Home Depot imports, and Walmart and Target, all that they import, all goes up. So they're mad at the wrong person. Why boycott Home Depot or Walmart? You should be boycotting the Federal Reserve. The Federal Reserve it does a terrible job. They never do anything right. And for 4 years, he's been lying to Congress, as I keep saying. That he keeps saying how his monetary policy is getting closer and closer to 2% inflation, and he knows that's not true. He knows that's a bold-faced lie. Because you can't keep increasing the money supply and get close to 2%. And he knows that. So what a hell of a way to try to increase confidence. To go buy treasuries? And then he has so many treasuries on his balance sheet, he went from 4 trillion to 9 trillion. That's ridiculous. You got to get rid of those treasuries. You got to start selling those treasuries off, but he doesn't. So that kills us if he does. I mean, the consequences when you don't sell those treasuries off, again, you have more inflation. So he's not. I mean, this guy. We should get rid of the Federal Reserve altogether. But again, Powell and his Fed has really screwed things up in purchasing these treasuries, which effectively, remember, just puts more money into the banks for the consumer to borrow and to spend. And at the end of the day, what really happens, the economy doesn't grow. Our national debt grows. Their debt grows. All of our debt grows. And that's the problem. So it's the Powell lie that's killing us. It's crazy. So I want to go back a little bit and just show you what has been happening. This we took a few days ago. Right here, if you can see my chart. This is the spiders right here. Now, as you know, when we got to December, everything stopped because that is when the institutions about that time has taken out about 250 billion, dumped 250 billion in stocks. 250 billion. And those, of course, the retail investor would come in and buy on every dip. Even though the retail investor had no clue that the breadth is so bad in the S&P that we're only 90% of the 500 stocks in the S&P are positive in territory. And they keep buying on the dip. I mean, that's unbelievable. Every time they go in and keep buying on a dip and to keep rallying this market, yet since August 2004, the S&P has failed every time it rallied to hold support. And it would cause what they call a breakout point failure. It would go up, hit support, it would never hold. In fact, I have this chart here that shows that clearly right here. See that? So there's August. Every time see back here, see how the S&P had good support? Well, every time now they rally because you got the tourists coming in and buying, and they'd rally and it pulled back. They'd rally, pull back, rally, pull back, rally, pull back, rally, pull back. And it's not holding support because you don't have the institutions participating. And that's what the big problem is, okay? Now, we can continue on this line because as long as the consumer, the tourists rather, not the consumer, but the tourist traders, as long as they keep getting enough money, they'll keep on buying on the dip. When they run out of money, that's going to collapse. And where they're getting their money from, and remember, they're getting their money from the shadow banking. Now, what is that? Well, if you remember, back in the right before the financial crash, housing crash in 2008, 2009, remember what the banks did. Many of the banks, they could not. A lot of people come in subprime loans. They come in and they want to borrow on a subprime loan, and the banks couldn't loan them. So what the banks did is they would take one of their vice presidents, we'll say, and they would say, okay, we're going to give you $400 million. Go open up a bank, and everybody that we can't approve will ship over to you, and you approve them. And that's how we got into that mess. And then finally that all blew up. That was shadow banking. So all these people are getting approved with bad credit, no money down, pick your payment, blew up. They're doing the same thing now. What happened is the banks are, again, opening up shadow banks, if you will, for small businesses who can't. So if you're in a small business, and you know this if you're listening, A small business person on Main Street can't go to the bank and get a line of credit, can't get a loan for payroll or anything else. So the bank saw it as an opportunity to open up a shadow bank for small businesses. So a small business, and these are crazy loans, you don't need to sign a note personally. You don't even have to have good credit. All the shadow banks want to see is that you have enough cash flow that they can come and they attach your checking account, and they can come in, they come in once a week, and they pull their money out. And interest as high as 20%. So what a lot of these small businesses are doing who are struggling because they don't have to sign personally, they don't have to put up collateral, they just are borrowing this money and they're putting it into the stock market. That's one of the reasons why you see this market over here, again, look on the chart, why you see for the first time, every time they buy in a dip, yeah, they rally, but they can't hold support. And it pulls back again and again and again and again. And this is going to continue, this will go on for another year as long as, and remember this has gotten so bad that if you look at the numbers, the allocation, in other words, it's the first time ever we've ever seen retail tourists, investors, what they've been doing is allocating 65% of their assets, 65%, are you nuts? They've been allocating 65% of their assets to purchase stocks. Now let's go back to the dot-com and financial con when those guys blew up. Right before they blew up, they were only allocating 18% of their assets to buying stock. But now they're allocating 65% because a lot of the money they're getting, these small businesses, I just told you, is from the shadow banks. So that is crazy. And then, as I said, we also have a real problem with valuations. The reason why the big boys aren't participating and why they dumped $258 billion, because the valuation to GDP growth is 232%. Now, right before the dot-com crash and the financial housing crash, it was just 115%. So let's think about this for a minute. Valuations are insane. In fact, I showed you the other day a broad valuation here. I'll put it up in case you didn't see it. Let me get up here for you. I don't know what the hell that was. Give me 1 second, gang. See if I can pull this chart up for you. There it is. I put this up the other day. This is 1929 crash, 1996 crash, 1999 crash, and here we are today. We're right at the same point. Now, this is the overvaluations across the board. That's including, okay, market cap to GDP. I just gave you that one. The valuation or market cap to GDP growth is 232%. Are you nuts? And back right before the dot-com crash and right before the housing crash, the valuation to GDP growth was 115%. We're at 232%. So there's a lot of problems out there, but again, nobody's really concerned. The other issue that's going on, okay, is that, let me see if I can bring these up here for you. I think I brought them back here. All right. Yeah, here they are, they're back here. Okay. So this, I just showed you the trend. But if we go and take a look, we took a snapshot of the S&P for you about 3-4 days ago, and we were around 594 on the S&P. Now we're at 585. We're down to 585. Okay, so it's even getting worse. So things aren't getting better. So, and same thing with the Qs. We took this a few days ago, it was 516. The Qs today are now down to 500. So you can see these are breaking down. We'll talk more about that when we get back. In the meantime, join my gang, philsgang.com. Be right back after these breaks.
For more information on this show, go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
When making wise investment decisions, Phil Grande has some sound reasons you should join Phil's gang.
You know, when I started this, they asked me, okay, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com. Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
We don't see a recession coming. Growth is good enough. We think a disinflation continues later in the year. And let's talk about QT. Right? QT is going to end. That's massively positive for markets and liquidity.
QT is going to end? How's QT going to end? That's a lie. QT is not going to end because of all this money printing. All these treasuries that all these countries around the world come by our treasuries. Okay, because the dollar also is going down, they're dumping. They're dumping those treasuries so they can get their value back because they lost a lot of value on their treasuries. So I don't know where she goes to school. Okay, must be some dummy school somewhere. But to say that
we don't see a recession.
Don't see a recession. Well, she's probably right about that because right now we are actually entering stagflation that nobody wants to talk about. That's right. Because what's going on right now is when you have slow economic growth, which we do, and you have also your yields, okay, as long as your yields are increasing, right? And remember, our yields have been increasing. The only reason why they're going down now is because all the bad economic news. But before that, our yields have been increasing and are going to increase again. What you're seeing now, yields are going down because every day we're getting bad news, and that's what takes the yields down. And also, we have inflation. So the three things you need is increasing yields, inflation, and then you need high unemployment. And man, we're going to get a lot of high unemployment because right now the consumers aren't buying, they're not participating, so people are going to get laid off. It's the same thing happened during the dot-com crash, during the housing financial crash. We saw the exact same thing. We saw where yields started to go up, and then all of a sudden yields came down because everybody started to realize the economic news we've been getting is a bunch of BS, and all of a sudden the yields started to drop. And then soon, all of a sudden, we start to see everybody getting unemployed. And once your neighbor sees, you go out in the morning and you're going to work, and then you see your car, the neighbor's car, and he's out there getting a newspaper. He hasn't left for work. He says, what's going on, Joe? Joe says, well, I got laid off. Oh, man, once that happens, everybody stops spending. We are in that same path. But let's get back to where I left off. And by the way, again, if you want, you can, I know a lot of people ask me, why are your charts just green and red. Well, I designed these charts 25 years ago. The difference with your chart and my chart is that you have a chart that gives you the regular generic chart. If on the day it closes down, the candlestick turns red. On the day it closes up, turns green. Well, 25 years ago, I said, what good is that? I mean, if you're a day trader, sure, you want that. But if you're a scalper, you want that. But as a position player, I want to know where the money's going. So we designed this chart 25 years ago that shows you is money going in or money going out. But let me finish what's going on here. So as I was saying a moment ago, the S&P a few days ago was at 594. And now it's already dropped down to 585. That's not good at all. Now look at this guy here. I mean, it's unbelievable how people just don't think the market's going to crash. Look at the Qs, NASDAQ 100. A few days ago, it was 516. Look, totally broke down. Now it's on its way. It's breaking down. Okay? It's now down to near 500. That's not good. See, all of these, the spiders, the Qs, okay, they all, as December, we got onto December, the whole rally stopped. And it hasn't rallied since then. Every time it's rallied, it's failed. Because unless you have the institutional investors putting money into the market, and don't listen to this, they're going to start telling you now, oh, it's on the sidelines. Look at the money on the sidelines. It's going to start coming in. That's a bunch of crap. Money on the sidelines doesn't come into the market. Money on the sidelines is where all of a sudden, when, like now, when interest rates, when you can go get a money market fund and get 4.5%, 5%, right? That's the money that's on the sidelines. People are buying money markets. They're buying CDs. That money doesn't ever come into the market. But Wall Street and the fake business network use that as a fake narrative to get you to feel good to stay in the market. Okay, so let's take a look at the next one. So the Qs, you can see, are totally failing. The S&P's totally failing. But look at this guy here. Okay, this is IWM. Whoa, small mid-cap stocks. This is the heart and the guts of the business. This is of the country. This is what holds the whole country together. Remember, all our jobs come from small companies, okay? And look at the stocks. They're totally, not only have they broken the moving averages, they've broken their own trend. Look, it's a disaster. And for this dope to turn around and say, oh, everything looks pretty good, earnings look good. Are you kidding me? Give me a break. What are you, nuts? Okay, now, and here, finally, look at, everybody wants to buy, Bitcoin. Boy, if things get bad, go buy Bitcoin. Now, I don't know anything about Bitcoin, but I know Bitcoin stock. And we short Bitcoin stock because when the economy goes down, so doesn't Bitcoin stock go down. Look at this. Here was the trend again. Look at the trend. It broke. And that's why we put our money into gold instead. Here's GLD. Look at the trend on gold, all right? And I think, and now gold's pulled back a little bit this week, but not much, not compared to everything else. And why is gold pulling back? But again, if you look, gold's the only one that's broke out of its trend. Gold is the only one where the NASDAQ has gone down, broke its trend, and you got the S&P breaking trend, the diamonds breaking its trend, only, okay, gold is rallying. And now you're getting a pullback because what happens is this. I've been doing this for 50 years. I've seen this every time. When you have the NASDAQ going down, you have the S&P going down, you have the small mid-cap stocks going down, and all of a sudden you're in a relative strength stock like gold. You take profits. Just normally, just something clicks up here that says, you better start taking some profits because, boy, I've done terrific with this gold. I'm up big. I'm up 20%. Everybody else is getting crushed. I'm going to take some profits. That's all that is, okay? Now, I said before, look, this is where we are, stage 4 complacency. That's the most dangerous phase to be in, okay? That's where we are. We've already peaked back in December. And nobody wants to believe this. We're in stage 4 complacency. This is dangerous. This is why they keep buying on a dip. But they also have access to money. That's dangerous. But here's another thing. Never buy on a dip when you're in a downtrend. When your stocks are in a downtrend, This also is Enron, by the way. This is Enron. And if I put over Enron, the S&P, it looked the same thing back then. But my point is, you never buy on a dip when you're below the moving averages. You never buy on a dip when you're in a downtrend. You will get slaughtered. You buy on dips on the upside. On the upside, when your stock is above the moving average and they pull back, then you add. Everybody's got it backwards. Cost average down, cost average down. Anybody tells you cost average down, arrest them, put them in jail. That's stupid. I mean, it's unbelievable. Hey, honey, you know the stock we bought at $80? You know Frank, our broker, he called me today, and guess what? That stock we bought at $80, we can get more at $35. He says it's going to be tough to find it, but he says he's going to get it for. Isn't that wonderful? He's going to get us that stock. What we paid $80 for, now we can get for $35. Because they think, oh, it's just going to go right back up to 85. Never, never. Buy on a downtrend. Yeah, I mean, it just, you buy an uptrend. This is another thing that's interesting. And I've been warning people about this. NVIDIA is going to take us down. NVIDIA is going to take us down. And here's NVIDIA red and Cisco's green. Take a look at Cisco. Cisco went up right before it crashed in the dot-com, 2001. Just before it crashed. It was up 4,000%. And then when Cisco broke, everything broke. The market collapsed. Cisco, NVIDIA is now our Cisco. NVIDIA's up 4,000%. And it's getting crushed. But you got these dopes coming in and buying on dips. And a downtrend. Unbelievable. When this guy breaks, it's just going to be like Cisco. It'll take the whole stock market down. Unbelievable. They don't want to hear it. This is what I mean. When they tell you to buy on a dip or cost average down, have them arrested. It's insane. This stock right here is Johnson & Johnson. We're in this stock. This is one of our stocks. Beautiful relative strength, doing terrific. You want to buy on the dip in an uptrend. See all these here, how they pull back? Now this guy's pulling back. When it's done pulling back, we're going to buy on the dip here. We'll add to our position. You don't add to a position in a loser. What are you, nuts? I mean, that's insane. Okay, you just don't do it because you'll get clobbered. I have one chart here, if I can find it now. I showed it to you. You just don't do that. I don't have that chart right now, but it's just the opposite. You just don't buy in downtrends because every time you buy in we put that up in show today, did we? I think the show. I want to show them this because it's so important. Let's see if I can get this thing out of here. Right here. If I can move this would be helpful. Let me get this out of here. Hold on, gang. I'm trying to get this for you. Here we go. Okay, show. All right. Where is it? Let me see if I can find it for you. Okay. Let's see. Where'd it go, Willie? No, I don't think I have it here either. I just made that chart, so we didn't put it, I don't think we put it in. I can't find it. I got Enron, credit card debt. No, I don't think we put it in. All right, well anyways, no, it's not in there. I don't know where it went. This chart we made up this morning, brand new, so I don't think we put it in there. Okay, but anyways, the same thing. If you're going to buy on dips, you've got to be out of your mind because all you're doing is putting yourself in a worse position. That's all you're doing, okay? And the beautiful thing about our Pro True color-coded chart, as I said years ago, I designed this. Over 250,000 people have used this chart, okay? Because it tells you if it's green, money's coming in. If money's going to come out, it'll turn yellow and warn you. And you got money, then also it'll turn red and money's coming out. Isn't that better than just having a chart that's telling you, okay, red, it closed on the low day, green, it closed on the high. You got to know what the money is doing. where's the money going? Everything drives the market is money, money, money. And here's the Pro 2 that we talk about all the time. What's beautiful about Pro 2, shorting. 80% of people lose money in the market because they never short stocks. They only buy. You can't make money. Nobody's that good. I'm a pretty good trader. I couldn't make money if all I did was buy stocks. It's too hard. You got to do both. And this tells you, okay, your stock's green, money's coming in, then it will turn red. And it's got what they call a sweet spot right here in the stochastic. It's the point in which the most money is coming out. The most money is coming in the shortest period of time. In the shortest period of time. It's a beautiful chart because it tells you when money is coming out. You line up your stochastic, which is your sweet spot. When they line up, you short the hell out of it. And it always works. It always, always works. And the beautiful thing about it, when you're buying, same thing. You have the sweet spot. This is the Pro 2. As I said, over 250,000 people have used this chart. See this? Again, sweet spot right there. That line, it's the period of time that the most buyers are coming in. Amazing amount of buyers are coming in, mostly institutions, and they're buying in that short period of time. And that is where you go long. And just the opposite, the one I just showed you, you go short. And it's such a help knowing where's the money go. Who cares about, I mean, these people come on in the morning on these financial shows, these jibber jabbers, and drive me nuts. And you only need a couple charts, a couple patterns to make money. And the biggest problem, too many people have too many stocks. And you just, like this is one of my favorite patterns right here. It's called the breakout pattern, consolidation breakout pattern. We make a lot of money on that. And another one is a flagpole. There's the flagpole right there, breakout. So you don't need a lot of stocks to make money. To make money, you got to get away from the noise. You got to get away from the noise. You got to follow the money. And the next time Powell is going to increase the money supply, it's really a fraud because he's trying to help the consumer when he shouldn't be. See you on the chart.